So I'm here and I'm going to talk about exactly what Jerome Powell has just mentioned. What is the conclusion? Why is he thinking that inflation is too low? Is that an issue? These are some of the big questions, but we will expect a 50 basis point hike from here onwards. Let me exactly show you why and how, what is going on. I don't have a background behind me, but I will say this is me on a motorbike. And the other thing you see over here is just like a little, it's just I love space, right? I did engineering, so you can't be mad at me. Anyway, let's jump in. Let's have a quick look as to what we are looking at right now. Obviously, this is Jerome Powell, who's just finished his conversation. So now he's talking about people wanting to buy houses. He's expecting that the housing market will slow down, which is a very, very good thing. Okay. Let me give you just the major kind of like recaps of what we've seen. So, what we're seeing is him saying that inflation is in fact too high. Good. That's a good thing. We want inflation to be too high. We want him to recognize. Also, we kind of need to take a second to realize that I had a mate. Look at this. Look at this. What is this? What is this? I mean, I had a pen. I thought, this would be good. Let me just use this. This is my board marker. I've really messed it up here. Anyway, glad that you joined. Thank you very much for joining. But I've made a right mess of my desk. Okay, let's not judge it. But anyway, we're talking about inflation being too high. He said that core goods are coming down, which is a very good thing. So we can anticipate in the next CPI, and also in the next core results for core to be coming down and also for CPI to be coming down as well, which is very, very good. And I think that does tie in to the whole rental process, into the whole property, because obviously we know that property takes up 33, or real estate takes up 33% of the overall index. So are we going to be excited about property? If property prices are falling, then we will see a lower CPI, which means we will see a more bullish market, and we will have essentially crypto seeing a little bit of movement to the upside. So that's one of the things. Second thing is house services. Okay, so housing services are moving down, which means less people are spending more money on housing services. Are you getting your gutters cleaned as often? Probably not. Are you getting your, I don't know, maybe like your internal floors refurnished? Are you getting your roof redone? Probably not if you don't have money. And if you don't have money, this is very good news for the Fed. So they're very much like this. And also the JOLTS report. So the JOLTS report is another major indicator that we see from the Fed. And that also is that we now have 1.7 jobs for every opening, as opposed to previously where we had 2 jobs for every opening. So we are seeing this come down. And I've done a video on this specifically just to understand how the Fed works, because the JOLTS report really does play a part, because, look, we will have a wage price spiral, which is what it's called. If I want to move to a job, if I'm earning 50K and I want to move to a job that's going to offer me, I don't know, let's say 100K, or a different one that's going to offer me 70K, right? Well, because I've got 2 options for every one job that I have 100K or I have a 70K. I'm going to take the 100K. And as I do that, the company that I move to, that you move to, that everybody else moves to, because they're offering, 100 grand, they're going to have to up their prices. So as they do that, it then means that their prices are more expensive. So every other competitor and every other company pretty much in the whole country has to offer more money, because you can't buy their stuff when it's more expensive, because they're paying their people more salary if you don't have a higher salary. So you leave that job and you move into another one. This is called a wage price spiral. And you end up with basically a vacuum of low-paid workers not being paid enough. So those are the kind of the three major kind of assets or facets that we should say when we're looking at the overall situation that Jerome Powell is talking about. I have said, and I will say again, I don't think he's got the full picture. I expect a lot of nothing because we had a lot of data coming out from Europe. Okay, so we had inflation, we had unemployment, inflation France, unemployment Germany, GDP Italy, core inflation Euro, inflation Italy, and then also we have Jerome Powell talk, and then we have GDP. So they're not going to call it recession because we have had growth. We had 2 quarters of negative growth, but that's not a recession anymore. I'll let you guys decide that one. I think they're talking some absolute BS, but let's move on. Anyway, the most important things is on the 14th, okay? 14th of December, we have Jerome Powell slap. What we're going to get? 50, 75, 25? What is the basis point hike that we're going to get? I think we're very much on course for a 50. He did say that he doesn't want over tightening. Now, that would give me an indication that he doesn't really want to do a 75 again. So we're probably looking at a 50 basis point hike coming up in December 14th. And everyone else would also agree with me. It's pretty fair to see. You can see, look at the probabilities. So we're looking at a 50 basis point hike. I do genuinely believe this, but the key things that are going to determine what the basis point hike is, and this could move drastically, but the key things are that we have the non-farm payroll and also the unemployment rate, because as we all know, again, if you watch my video on how the Fed works, you would have seen that the Fed looks at 3 major indicators. One of those is unemployment. So if unemployment comes in, let's say crazy low, and everyone has a job, this is not good for the Fed. Okay, it's good for us. We really want everyone to have a job because we're very philanthropical. We love philanthropy. Philanthropical, maybe. But anyway, so we want everyone to have a job, but obviously the Fed does not, because they're a number on a screen, and if you have high unemployment, you have a good economy, which unfortunately is the case. And then later on, as we look through, we get GDP from Eurozone, but also we get another CPI report before the 14th of December. So this is what the Fed is really going to be looking at. Like I said, I don't think that we're ever going to get anything really crazy from the Fed right now, but we've essentially just got a 50 basis point hike. That's kind of it. Oh, and also they've thrown attention towards the inverted yield curve. The inverted yield curve, you can talk about the 210s. That's been inverted for a long time. It's got the most inverted recently. You can talk about the 1 month and the 3 month. This has also become inverted. The 3 month and the 1 year inverted. So basically, if you want to buy bonds for the long term, because typically the longer you invest, the more yield you get. Unless the economy is going to go into a recession and it all goes down the toilet, then you want a higher yield on the shorter term. Because you're like, well, get it on the shorter term because I know afterwards the economy is going to go down the toilet and I'm not going to get this yield. This is where you get an inversion. Okay. So your 2 year is worth more than your 10 year because in the 5th year, economy is going to go down the toilet, for example, and then you end up with no yield at all. So this is where you get an inversion, and this always indicates a recession. So we're seeing this now in, for example, the 3 month and the 1 year. We're seeing this everywhere. Okay. So it's really, really not good. This is something that we have to pretty much just accept. It's really not good. But anyway, I'm going to pause this here. I'm going to actually end this here because, yeah, we're going to see a 50 basis point hike, as you can see on the screen here. Next week, we have at the end of this week, on Friday, we have the non-farm payroll. We also have Canada. So that will give us a bit of an indication, but it comes out at the same time. So not really anything. We have core PCE. That is quite interesting because that will be very, very similar to the CPI that we see. So take that into consideration. But all of these are going to determine what Jerome Powell says on the 14th of December. Currently, his overarching message is basically, look, we are going to have a higher target. Our target is going to be around about 5% Fed fund rate, as opposed to, our initial target, which I can show you right now, if I go into St. Louis, if I go onto Fed St. Louis, we can see it was 4.4. Okay, and I'm very cautious. I've got a bloody white t-shirt on and I'm bloody putting my arm all over the gaff, right? Not good because, as you've seen, I've spilt my green pen everywhere. So 4.4 is a Fed fund rate. That's not going to happen. Sorry, mate. Not going to happen. And we're going to end up a little bit of crypto. Let's have a go. Sam Bankman-Fried, red flags were seen in all corners of his empire. It's all right saying that now, isn't it? You, my friend, have messed this right up. Yeah, you effed it, right? It's all right saying this now. Also, have you heard Bloomberg were given the story that Sam Bankman-Fried was a fraud, but they didn't want to publish it because it's not good for their advertisers. So anyway, that's everything. If you guys have any questions, let me know. If you enjoyed the video, drop a like and also subscribe to the channel. Thank you very much. I do appreciate you following. Overall, inflation is too high. Core goods are coming down, so we want less inflation, which is good when we get the next PCE and the next CPI. We should see core coming down, which is good for us. Maybe we can go long on Bitcoin on those short-term trends, because they are short-term trends. We have looking at the long-term trends, we're basically screwed. We're going to be taking it harder than a prison convict who shares a cell with someone much bigger than him. You can imagine how hard they take it. So we're going to be taking it long term, but short term, we should be okay. And so, anyway, JOLTS report looking good. Jerome Powell looking to take his foot off the gas relatively soon. So overall, I'm long in the slightly longer term, but there's still more downside for crypto. Anyway, thank you very much, guys. Have a good night, and I will see you later on.